Graceman Knowledge All, GMK. Welcome to my YouTube channel, where you are taught all you need to know about accounting, finance, and lots more. In this video, you will learn about accounting entries. Remember to like, share, and subscribe.
Welcome to Graceman Knowledge All. In this episode, we will have a detailed exposition into concepts, password, and PIN codes that helps you understand how to pass accounting entries. And the fundamentals of accounting entry is to understand the part of the debit side or the credit side that will be affected in each and every transaction. And for you to understand where to debit and where to credit, it is important that you understand these fundamental points that we explained here. I would like to let you know that DEBIT is one of the passwords to understanding how to pass an entry with respect to any transaction. Note that DEBIT is saying that you debit expenses and assets when they are increasing. That simply means that when expenses and assets are increasing, they should be debited. And the same thing applies to income and liability. This is saying that when income and liability are increasing, they should also be credited. We have scenarios there to buttress this point. The other side to this is CIDA. CIDA is saying that when you credit expenses and assets, when they are decreasing, you will see from this analysis that you debit expenses and assets when they are increasing, while you credit them when they are decreasing. So CIDA is the opposite of what DEBIT. Why you debit income, liability, and equity when they are decreasing. So in any transaction, when the moment you have figured out from the transaction that assets or the expense are decreasing, what do you do to them? You credit them. And in any transaction, when you discover that income, liability, and equity are decreasing, what do? You debit them. What does this mean? This translates to these two summaries we have here. That now tells us that the natural balance of asset and liability is always the debit balance. The natural balance of expense and asset is always the debit balance. What led to having the natural balance of expense and asset as debit balance? What led to that is you debit expense and asset when they are increasing. So that means that when you see a chart balance and you discover that expense has a credit balance, what do? You raise a flag. Why? Because when they are both increasing, they are to be debited. And that translates to having the natural balance to be a debit balance. That also means that it is abnormal to have a credit balance in what? It is abnormal for an asset and expense to have a credit balance. Anytime such happens, you should raise a flag and investigate the reason as to why expense and assets have credit balance. Now we go to income, liability, and equity. It is also important to know from this extension, from DEBIT and CIDA, that the natural balance of income, liability, and equity is a credit balance. This also means that when you see a chart balance and discover that income, liability, and equity, any one of them has a debit balance, you should also raise a flag because it is abnormal. Why is it abnormal? When they are increasing, you credit them. When they are increasing, they should be credited. The highest that should happen is for you not to have, for your income, liability, and equity to be zero. If they are zero, it means the account has no balance. But they should not have a debit balance. Having said that, we use these scenarios to buttress what has been said earlier. Number one, that Grace Foods started business with 2 million naira cash. That Grace Food started business with 2 million naira cash. That Grace Food started business with 2 million naira cash. Advance. Two things are important here. The first thing to note here is started business. The money that is used in starting business is capital. And that Grace started the business with cash at bank. So another account that we opened there is cash. Adam, The first question we ask ourselves, what class of account is capital? What class of account is cash at bank? Capital is equity. So capital here is equity. Cash at bank is a current asset. And we said, so another thing we need to establish for us to know the part that we debited or credited here is, we know that this is capital. This is cash at bank. Now the first question, what has happened to capital? What has happened to capital? Looking at this scenario, that they started the business with 2 million naira cash at bank. Capital has increased. Because if before, of course, looking at started the business, that means prior to this day that this 2 million was paid into the bank as capital, there was no capital. So that means capital has increased. Also, prior to this day that this money was put in the bank, the bank had zero balance. That also means that the cash at bank has also increased. Now, capital has increased. Cash at bank has increased. What happens to capital when capital is increasing? Going back to our basis said that you credit income, liability, and equity when they are increasing. So that tells us here that equity has increased. What do we do to equity? We credit equity. What does this say when asset is increasing? This said that we debit expense and assets when they are what? Increasing. What do we do here? We also debit assets. So how do you pass the accounting entry? To pass the accounting entry here, using the drawdown, we have our debit, we have our credit, we have the cash, we have the capital. We said cash will be debited. That means that this cash account will be debited with 2 million, and capital will be credited. That means we credit capital with 2 million. That's that. So just a little recap. When capital is increasing, what happens? You credit capital. When asset is increasing, what happens? What do you do to asset? You debit assets. This DC and CD, these two codes are what we use to solve all this question. Next question. The Graceman paid rent for the year 150,000 naira by check. The Graceman paid rent for the year 150,000 naira by check. Paid rent by check. That means how could eventually be affected? Now, the next question is, what is rent? You also need to understand the class of account that will be affected. Rent is an expense. And because rent is an expense and you paid it for the year, rent is an expense. And this is an asset. He paid rent. What has happened to rent? Rent has increased. What has happened to assets? He paid rent. He issued a check 150,000 naira. What has happened to assets? Assets has reduced because from the 2 million he started the business with, he had issued a check for 150,000 to be paid to the landlord. That means that the landlord will go to the bank to withdraw the 150,000 naira. And as a result of that, the cash at bank will reduce. So what happens to bank? Bank will decrease. Now we go back to our basic and interior. Basic says you debit expense and assets when they are increasing. Rent is an expense. What do we do to it? We debit it. What has happened to bank here? Bank has reduced. Senior says that you credit expense and assets when they are decreasing. So what do we do to bank here? You credit bank. What does this mean? This translates to having our account, we have our rent, we have our bank. We debit rent with 150,000 naira and credit bank with 150,000 naira. Again, why are we debiting rent? Why are we crediting bank? We are debiting rent because rent is an expense, and businesses will debit expense when expense is increasing. The reason we debited rent. And CDA, which is the opposite of this, says that you credit expense and asset when they are decreasing. A bank is an asset, the current asset for that bank. It has reduced. What did we do? We debited it. Going to the third question, that Graceman bought delivery van 250 naira per check. That Graceman bought delivery van 250,000 naira per check. Bought delivery van. The first account to take note of is delivery van. Another account to take note of it by check. Bank will be affected. The next step to take is to know the class of account delivery van and bank are related to. Delivery van is an asset. What class of asset? A non-current asset. Bank is also an asset. What class of asset? A current asset. What has happened in this transaction? That Graceman bought delivery van 250,000 naira cash. What has happened to the delivery van? Peradventure, that Graceman didn't have delivery van. Now that Graceman have delivery van. That means that the delivery van has increased. And this delivery van was purchased and it was paid by check. That means that the supplier taking the check to the bank will cash 250,000 naira cash, which means that the cash that Grace has in the bank account will be reduced. That means that bank will decrease. Now we go back to this cell and see that this says that we debit expense and assets when they are increasing. So as the delivery van is increasing, what happens? We debit it. And we credit expense and assets when they are decreasing. Bank here has reduced. What do we do to it? We credit it. How do we now create an account? We have the description, we have a debit side, we have a credit side. Delivery van account and the bank account. We said that we debit the delivery van account being an asset, and as an asset it is increasing with about 250,000 naira. What are we doing to bank? We said that we credit bank. What are we crediting bank? Bank is an asset, and as an asset it is reducing. And CDED tells us that you credit expense and asset when they are decreasing or reducing. Now we go to the fourth question. Diabetes food bought 10 bags of flour, 50,000 naira on credit from cheap flours. Diabetes food bought 10 bags of flour, 50,000 naira on credit. So, what are the kinds of accounts that will be affected here? Number one is purchases. Why is it purchases? Diabetes food bought the flour to resell. And what is purchase? Purchases are goods that are bought for resale on credit, but from cheap flour. So another account that will be open here is cheap flours. Now the question is, what class of account is purchases? What class of account is cheap flour? Purchase here is an expense. While cheap flour is a liability. Why is it a liability? It's a liability because we have an obligation to cheap flours. And what's our obligation to cheap flour? Our obligation to cheap flour is 50,000 naira. The cost of the flour bought on credit. So what has happened to expenses? Bought purchased 10 bags of flour, 50,000 naira. So that means purchasing sale has increased. What has also happened to liability? Liability has also increased because by buying 50,010 bags of flour from Chi, our obligation to Chi has increased. Now we take it further to the debit side and the credit side, to the effect of either the debit or the credit. Testing says that when expense and asset are increasing, what do? You debit them. Purchases and expense has increased. What do? We debit it. We say that chief flour is a liability, and because the liability, it has increased. And this says you credit income, liability, and equity when they are increased. So what do we do to liability? We credit it. Going back to our journal, we have our description, we have our debit side in Naira, we have our credit side in Naira. What do? We purchase this and she flowers. What are we going to purchase? We are debiting purchases. The reason we are debiting purchases has been established 50,000. What are we going to check as well? Crediting to flowers. So going to the fifth question, now going to pay chief flour 40,000 naira by check, part payment of the outstanding due to chief flour. The first account that will be created there is chief flour. The second account that will be created there is bank. What class of account is chief flour? Chief flour is a liability because it was established in the previous question that we bought the flour from chief flour on credit, and because we bought it on credit, chief flour is still our creditor. While bank is an asset, a current asset for that matter. Now, what has happened to chief flour? Prior to this time, we have 50,000 naira on the credit side of chief flour. Now we have paid 40,000 naira. That means that our liability with chief flour has been reduced by about 40,000 naira. So that means that liability has decreased. And what has happened to bank? Because chief flour will need to go to the bank to carry the money against our account. Our bank has also decreased. We go back to Diesel and Cedar. Cedar says that when income, liability, and equity are reducing, what do we do to them? We debit them. So liability has decreased there. What do we do to liability? We debit liability. And Cedar also says that when expense and assets are reducing, what do? We credit them. Assets, yeah, bank has reduced. What do? We credit bank. What is that the journal entry? The journal entry says that we have chief flowers, we have bank. What are we doing to chief flower as stated? We are debiting chief flower with how much? 40,000 naira. What are we doing to bank? We are crediting bank by 5,000 naira because bank is reducing. Now we go to the last question. Diverse foods sold 1,000 loaves of bread at 300 naira to Yeti store on credit. Diverse food sold 1,000 loaves of bread at 300 naira to Yeti stores on credit. The first account that will be affected here is Yeti store. Another account that will be affected there is revenue. So, revenue. What class of account is Yeti store? What class of account is revenue? Yeti store is a receivable. Receivable used to be debtor before the advent of IFRS. Revenue is an income. What has happened to receivable? Receivable, we know, is also an asset. What has happened to receivable? Receivable has increased. Why? Because Yeti store is now owing us 300,000 naira. What has happened to revenue? Revenue has also increased. And we said that this say that when expense and assets are increasing, what do? We debit them. And when income and liability and equity also increasing, what do? We credit them. So receivable here has increased. We are debiting it. Revenue has also increased. We are also crediting it. So we have Yeti store and revenue. As stated earlier, Yeti store as receivable has increased. So what do? We debit it with 300,000 naira. Revenue has also increased. We pay revenue with 300,000. Yeah. Should you have any question, use the comment section.
Thank you so much for watching. Do not forget to like, share,